Greetings, members, one and all of the Salivation Nation. Ex-Broncos fans sent me a link to this interesting article about how China is taking control of gold from the COMEX. Let's explore. Now, typically, articles from Zero Hedge I tend to shy away from because of the extreme bias that they hold, and sometimes they tend to oversell precious metals, which, in my opinion, as I mentioned before, they sell themselves, so there's really no need to oversell anything or to pump or hype in this particular case. But nonetheless, I do think sometimes it's interesting to kind of engage and kind of look into what's going on in some of the markets, especially some of the technical side, and learn a little bit, because you kind of take away and see where things happen behind the scenes. And I do believe there is some validity in what happens, certainly in certain cases. And this is something that is quite interesting, although I take it for face value. We'll see what happens, but it also and makes me think of something else that was brought to my attention by IQNet some time ago. So let's take a look at this. The correlation between gold and the U.S. dollar exchange rate has become clear recently. And this is by David Brady from Sprott Money News. He first cited the idea of gold being pegged in yuan terms in February, based on the increasingly narrow range in the gold-yuan exchange rate. He emphasized this given that what it means for gold and the U.S. dollar exchange rate becomes primary driver of the price of gold and dollars. Now it's mainstream thanks to the escalating trade war between the U.S. and China's response in devaluing the yuan by 8% in 3 months. In addition, Jim Rickards pointed out in his belief last week that gold is pegged against the IMF's currency, the special drawing rights, or SDR, and that China and the IMF are coordinating to keep the SDR within a range of 850 to 950 against gold. The article goes into detail on what each of these pegs means for gold, and there are obvious common denominators between the two, gold and China. It's clear that China is now directly involved in gold pricing, and by derivation, the role of the COMEX is diminishing in the process. Starting with gold in special drawing right terms, or the gold to SDR exchange rate, Jim Rickards says it's pegged at around 900 with a range of 850 to 950, a soft peg that is likely to tighten over time. The SDR is determined by a basket of currencies, including the dollar, euro, yen, pound, and since October 2016, the renminbi, the Chinese yuan, with the dollar being the most heavily weighted currency. And some of you may remember there was a fear that in a later meeting that the BRICS nations' currencies, or at least some of the others, would essentially gang up against the dollar or set the stage for that to occur over time. And of course, it's kind of unclear about what that meeting was about, because we really couldn't get any details on what happened in that meeting. Each day, the SDR changes in value based on how these currencies perform against the dollar and their weightings in the SDR's calculation. It's a supernatural currency in a sense that its value is based on the currency of multiple countries, not just one, like the dollar, and is favored currency of both China and Russia to replace the dollar as a new global reserve currency. So that's sort of hints on what I'm talking about. Chart below, as of July 11th, shows the range of values for the SDR since the inclusion of the CNY. And there we can see it. The next chart shows an SDRs with a broader 11% range between 850 to 950 and a narrow 5.5 range between 875 and 925, around 900. There's the gold to SDR ratio. There we go. We see it. And in order to determine the effect of this peg with the gold to SDR peg and the value of gold in dollar terms, he put the following matrix together. And there's what the prices, I guess, would be at 1.41, 1234, and the 900 1269. And it kind of goes in. But see, basically, what I get from this is, China's trying to control more, take it out of the COMEX, and I think they very well could, in some ways, be trying to do that and make that with their SDR, and to see where it goes. And he said gold at 1244 falls between 1234 and 1269, and highlighted in orange above, and that's the situation currently. He talks about that based on the goalposts for these ranges, gold is limited on the upside at 1387 and on the downside at 1131. It's no coincidence that the peak and trough in gold since mid-2016, and now we're 1377, 1124, and that supports Jim's thesis that gold is pegged in SDR terms. This means that China, in coordination with the IMF, is controlling gold prices. It also means that gold is unlikely to go higher or lower than these values unless the SDR breaks out of its range. In the short term, as long as the SDR does not fall significantly below 1.41, and with gold SDR limited on the downside to 850, that means that gold could find significant support at 1200 or slightly below. So he's saying based off that we will see prices fall. And but I think it's interesting because you see how it's setting them up to where China is going to have the control of the gold prices in another response, a back channel response to the trade war that we're seeing start right now. And here's more charts to kind of talk about it. It goes into more technical analysis here, but it reminds me of that being the case is something called arbitrage, which is mentioned where, people can make money on the differences between the prices of a certain commodity based off of the different prices in different markets. And that leads me to this, which is what IKEONet had shared some time ago. And it's didthesystemcollapse.com, and this particular thing, it tells you about the West prices for gold and silver, and the East, and how the East is typically related to hard assets, whereas the West is more paper, and we see now the difference between the East and the West, where the East is higher than the West and prices. Especially look at silver; it's pretty crazy, and they could take advantage of that with arbitrage and make money off of that difference by buying the Western metals at the prices for what they are, and get them at a discount. Especially look at that, and obviously there's a caution period here. The difference is $1.16 between the silver there, which reminds me of, again, something I posted in a previous video. Small Gold had made note of the differences, or what India is doing in buying up silver. I think that might be part of what's going on here in these numbers here, the huge difference between silver prices in the East versus the West. So we shall see. I think there's a lot of strategy. And see, I think the reason why I mentioned this article that ex-Broncos fan sent me, I think is I take it for a grain of salt. There could be some things about it that could be flaws, for sure. But at the same time, it just means that there are avenues, there's different ways to make these things happen and to manipulate. And especially when you have two different markets as such, which are great to kind of balance each other out, typically those different markets can be taken advantage of in some ways. And especially if China really is taking control of gold out of the COMEX in their own, with the SDRs and with their ability to manipulate it in their own way, just like they're using their currency to do so. So it's anybody's guess really where things go, but post your thoughts below. I think it's quite fascinating. We'll see where things head out in the future here with gold. As we know, and I've mentioned many times, we accumulate it no matter what, because we understand gold and silver are money and have been money for thousands of years, and they'll protect us. There's only so much that anyone can do, any nation or any entity or enterprise, to manipulate it, only so much. And if the price goes down, well, that means it's on sale. And natural market forces, I do believe in natural market forces at play. And I think that is going to be the biggest determination of where things go with precious metals from here on out. Thanks again to ex-Broncos fan for sending this along to me. Hope you all enjoyed. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.